Hey everybody, it's Pete. Welcome to a new episode of today's Best Stock Picks. It's Tuesday morning, August 11th, 2020, and the futures are up again. Kind of like a broken record at this point. I don't know if you saw the news with Ted Cruz yesterday, essentially highlighting the fact that how big of a disconnect that there is in the world right now, and specifically in the United States, about the have and the have-nots, where it looks like some senators are trying to provide more money for people that are out of work right now and were living paycheck to paycheck prior to the pandemic, and Ted Cruz making fun of giving them more money. Look, I'm not turning this into politics, but the point is there's still such a giant disconnect, but the market doesn't care right now. If you know classic market wisdom, the market's a forecasting tool. It is not trading in the now. When you buy earnings, when you buy a stock that has earnings, which we're going to talk about a couple of those right now, specifically NIO and NVAX, you're buying the next quarter. You're buying what's going on in the future. You're not buying what just happened. The futures are up right now, and it looks like we are within one bullish move today, which it looks like we're going to have another bullish gap, which is just amazing. It's confusing, quite honestly. Anybody who's a full-time active trader for years, there's a disconnect between we just keep floating higher, and the volume just keeps falling off a cliff. And something that was interesting here today, yesterday, which everybody in our community was just all over, which is super exciting because that's really where you really learn how to start trading, which is it was just so obvious, the sector rotation. We started to see all the tech stocks nosediving and staying down, and a lot of what you might call flight to safety stocks, that kind of verbiage, blue chip stocks, all breaking out and making new highs. So what does that tell you about forecasting for the future? If tech stocks are starting to get hit, rotation starting to go into these stocks that might be called safer, like Honeywell and those kind of stocks, DuPont, Dow. Think about it and mark this date down and see what that means. As a forecasting tool, what does that tell you about going forward if we're breaking out in stocks like FedEx and UPS and Dow? But the major indice of the SPY has hardly anybody trading it. It's interesting. It's definitely interesting. It looks like we're going to see another gap here. By the way, if you want to trade together live with me in real time for the next 30 days where we cover all of this, I'd love to have you as a part of my community. You get to see my entries, my exits. I give lessons all day long. Definitely click down and learn about the boot camp and see how other traders are doing in there. And absolutely click to subscribe to the channel. You get updates like this every day. So we're going to get right into it. We're going to share the screen. And we're going to start out with NVAX and NIO, two stocks that both had earnings. NVAX yesterday, NIO this morning. NVAX is actually down a little bit, down to $1.40 right now, but I still like the long. There's no reason not to like the long. $1.40 is not really that much of a pullback after earnings, so I'm still looking to be long. Yesterday we actually had a pullback inside candlestick, broke out yesterday. I still like the long. If you initiated a swing trade long yesterday on the breakout, just make sure that you have yesterday's low or somewhere in that area. You're going to decide to scale out or get out if and when until that trade starts to work out again. The other one is NIO, which NIO actually reported this morning. I've never seen this before. I shouldn't say I've never seen that before, but I just think it's kind of interesting. Reports unaudited second quarter 2020 financial results. Look, it's a public company, so it's got to be audited to some degree. But this stock is, when it's in play, it's active. And this is probably a little bit more of a swing trade. So if you watch this morning's video about day trading into a swing trade and the trade by trade analysis, you could probably take this into consideration. It's up 8% at this point, pre-market, a few hours before the market opens. Not really a monster gap, but it is above these most recent levels. So you can start to work in order in the direction of a longer term swing trade. And we'll put that trade on together as long as it stays above 15. That's the level I'm looking for. A couple of other stocks that we just mentioned, and this is where it really starts to be like, wow, FedEx keeps making new highs. FedEx and UPS yesterday, I should say the last couple of days, just continue to outperform, which I know that even sounds weird when we've been talking about Apple and Facebook and Microsoft and DocuSign and all these other stocks. So again, this is a scenario that's very important to recognize, and I guess FedEx really drives it home a little bit clearer. The stock just bounced, let's just basically say $30 in 2 days. That's a monster move for this stock when it normally does this. It does have good moves, but not in 2 days. So what we're looking for now is I could still look to be day trading this stock long, but I would not be initiating a new swing trade long because of how far and how fast it's moved. So I'd be looking for a day or two of consolidation before I built a new position long, but just tremendous relative strength in both of them. Stella actually called that Groupon in our community a couple of days ago, and I said, not yet, first day, let's see what it does. And now it actually paused. So this is a really good example of a stock that does not have order flow. You're basically only trading with that one day, which lowers the argument for the trade, as opposed to it's been up for days, weeks, and months. This was only one day. So we rightly said, don't chase the price. Stock pulled back a little bit yesterday. Now we're looking to see if the stock can find buyers again. If we start to get the minimum criteria, which should be well bid over a couple of days, maybe we can start looking for the stock to make a run up to that 34 level again. Not yet, though. Something to keep in your watch list. NKLA was also discussed in our community yesterday, and I could definitely see why it was called out. It exploded, had a gap following through, was getting some buying, and again, as a day trader, you're looking at this and you're saying, okay, this stock is just continuing to go up. Here's the way I'm looking at it. The stock is essentially in a 3-week trading range after roughly 5 weeks, maybe even more, 1, 2, 3, 4, 5 weeks of selling. Finally went well bid, and then just yesterday, Monday was the first day it broke out. So absolutely should be in the start of the traffic is starting to open up, and you could start stepping on the gas a little bit, but you can't ignore this. You can't ignore 5 weeks of selling. And if you really want to look at it, the stock was in a trading range here on the daily chart, and yesterday was pretty much the first day that it broke out. Yes, the weekly chart is well bid, but you can clearly see here the stock was stuck in a box. Now, it's a bigger box because the stock's a little volatile, but it's going to be interesting now if it stays out of this box. We have a gap fill here and then a lot of room to go. So really this level here around, let's call it 49-ish. What's that close? 48.84. So let's just say 49. Around 49 will be the first target, which is around $5. So a lower opening today in this strong stock, not necessarily a bad thing, give you a better price. It expands that profit potential up to 49. And then above 49, we have some room to go. So that's outlining that stock. Run is a trade that we made really, really simple, easy, profitable trades in last week. And now what's kind of interesting is now we've consolidated for 3 days after that momentum move. So you hear me talk about it all the time, a push and a pause, a push and a pause. So we had a push and a pause. We had a push and a pause. We had a push and now a pause. So we're looking to be long this stock again and actually look to initiate a new swing trade because now it's paused, good risk management and profit potential. So the trade, the most recent move was roughly $12. So that would be the next move, depending on where it opens today. VSLR called out also in the community yesterday. And look at that, looks almost identical to Run. Perfect setup where it pushed up, pulled back, pushed up and paused. Looking at that one as well. And now we start to get into what you might call the flight to safety stocks. Honeywell, 4-day run to the upside and in a bigger candle yesterday. A higher opening takes it into resistance tomorrow. So a higher opening and a push higher would be profit taking for this stock tomorrow, today, not looking to initiate a new trade on that higher opening. Caterpillar was actually one that I've been stalking for a while now. I've been waiting for it to close over 140. You can see kept failing. It now has closed above that level. If it closes and trades above yesterday's high, we're looking at a run to 150. Again, sticking with these stocks, DuPont with a nice breakout, Dow with a nice breakout, Nike with a nice breakout. Nike, out of all the ones I just called out, I like a little bit more. Dow and DuPont and Honeywell specifically, I'd like to see prove it stays above that level. I think I'd be a little bit more aggressive on Nike, and you can see why it's actually punting and pushing through all-time highs right now, which is kind of interesting, right? So how do you not be looking at a stock like that at all-time highs? This is, I guess, one of those outdoor stocks that's going to be benefiting if and when the world gets back to normal. Last but not least, I want to talk about PENN, which is a stock that we've been trading fairly aggressively and calling out in the room every day. You can see why. It's just a really nice explosion once it finally stayed above this level that it's had a hard time getting through. And yesterday we saw some selling. So we're actually going to end up opening higher today. So again, push up strong to all-time highs, profit taking, pulls back, and now looks like we're settling in, looking for a new move. So I'm going to be looking to bid for this stock again today. And you could be looking for a swing trade to take it to all-time highs. Two trades that I think are interesting that I'm not ready for yet. RCL, which let's just say RCL, CCL, the cruise line sector. Again, just looking at this chart, hasn't done anything in 7 weeks with good reason, right? Maybe even more than that. one day of buying. Don't get all excited about one day. And the same thing with UAL. UAL actually one day out of that, and you can see clearly it's a trading range. So getting back to what we've said about some of these stocks that have been dormant, and NKLA was a good example there. It is better to look at stocks right now that have obvious order flow and room to go versus a stock that just one day it kind of peaked out and got your interest. Should definitely be in your watch list, but in your watch list looking for a little bit more proof from the market that it's ready to go. Remember, we keep using that analogy of stop and go traffic versus open road. This is the first time the road opened up a little bit. Let's see if it stays open. So those are some good ideas for today. The market, the SPY actually opened it. The futures are up 24 points. The ES futures, the S&P futures right now, E-mini futures, we're not that far away from all-time highs, which is really remarkable. Really remarkable. Just the resilience of the market with the stimulus package is pretty amazing to see. So let's see what happens if and when we actually hit that high, which might be today. It'd be interesting to see. Have a great day, everybody. I will speak to you soon.